welcome to AGXM. Today joining me for the second time is none other than the Chief Trading Strategist from BubbaTrading.com, Bubba Horwitz. But first, if this is your first time joining us, please go ahead and subscribe to our channel, as well as check out AGXPay.com to learn how the power of modern silver money can help you claim financial freedom. And now to our interview. Bubba, welcome back to the show.
Nick, it's great to be back with you. I'm glad you invited me back.
Well, people loved you after our last episode, so we're eager to have you back. All right, diving right into it, you've said in a recent interview that you believe that we're in the beginnings of a recession. Can you explain your thought process on this and what factors you believe are playing into it?
Well, yeah, I think when you look at the markets, you see, first of all, yes, equities are going straight up and nobody cares. But of course, that's always the case before the end shows up. When you look around, you look at the global economy, it's melting down. When interest rates have to go negative, that's not a good sign. When you start to see some of the job structures start to change, yeah, there's a lot of jobs available, nobody to fill them. So it doesn't do as good to have 6 million jobs open when there's not 6 million people that could fill them, even if they were there. So these are all little things that we all tend to ignore. We tend to ignore the repo rate. You know, that the banks have to borrow overnight for more money now. We have to, that the Fed has to keep infusing capital, the debt. I mean, eventually you got to pay for all this. And right now, again, it doesn't mean that we're going to have it tomorrow. Recessions are not identified by the Fed or economists until 10 years later. Oh yeah, that was a recession. I'm saying now that we're in the very early stages. Would it affect my trading? No, I'm going to continue to invest the same I always did because the markets do the same thing over and over again anyways.
Right, and you've mentioned that despite this, risk appetite is high while fear levels are actually quite low. In your opinion, why is what you're seeing in the market not being reflected in investor behavior?
Well, that's a good question. But again, the real key here is that money runs the world basically. And of course, the money is continuing to go into markets. And when markets continue to go up, look, you have forced every investor, if they want any yield on their return, they have to go into the equity markets. You can't go anywhere else to get liquid yield that's going to pay you. Now, of course, you can continue to hear people say, well, the stock market's up X amount and it's higher than the 10-year. Well, that's fine, except the one difference is the stock market goes down, then your money goes down with it. Whereas if you buy the 10-year, you get your 1.5. Again, I'm not saying you should take that, but they're forcing, especially the elderly, into the equity market to get that dividend check because they don't want to spend through the money they saved their whole life to get to. So that's why we continue to see this appetite for risk, because you're basically forcing every asset class, every person to go into one asset class.
Yeah, that sounds like a recipe for disaster to me. So then would you say that we're in a bubble, Bubba?
Well, again, bubbles are really hard. That part's hard to define. I mean, in the 90s, we knew it was a bubble. It's just a question of when it was going to pop because the earnings were so crazy. We don't have that same issue today. But today, the different bubble we have today is that interest rates are so low and there's so much debt, and it obviously mounts. I mean, you got record margin debt, you got record credit card debt, you got record corporate debt. Now, eventually, those things slow down and it breaks down. And again, the markets will not come and announce themselves when they're ready, but when they're ready, you'll know it. You'll be able to see it, but it'll be happening so fast. And of course, we'll first see the people that don't think it will go down, and then you'll have the panic, and of course, you'll get a repeat as we've had, going all the way back to Tulip Mania.
Of course. So as you know, the project is based around metals, specifically silver. How are you seeing all of this activity impact the metals market?
Well, again, I look at this metals market right now. Listen, I'm a big fan of metals. I own them. I own physical, okay, but I also trade them. And right now, I see gold going higher. I see silver going lower. I see the ratio going back out into the 90s again, which is ridiculous considering it was supposed to be 15. But in the meantime, the patterns look very clear. Silver is going down, and I am short silver in the futures market. I'm long gold in the futures market, but I do own silver, personally. But in the meantime, that's what it looks like right now, because for whatever reason, silver does not want to participate. And, I don't look at them as true fear assets, right? I don't think of them as places to go for safety. They may be a currency someday, but for today, okay, I look at just simply price, and price tells me that gold should go higher and probably test that January high when we had that panic. Mm-hmm. And silver is probably gonna go below 1750 in the futures market.
Okay, well, I'm curious though, in comparison, what are your thoughts on the performance of assets like Bitcoin?
I like Bitcoin. I like the crypto space, but I think if you're going to get into there, I mean, it may one day become, we'll call it the digital gold. But I think for now, if you're going to play in that market, it's got to be with the risk capital that you are prepared that if it doesn't work out, I mean, I own some, I don't own a ton, but I tell people if you want to invest, whatever you can afford to lose, that's what you should invest. But I do believe that they're going to be a big show. The real problem is, other than Bitcoin, which do you pick? Who do you go with? But again, I think that cryptocurrencies are here to stay, especially as more of the libertarian movements pick up and we start to see more people that understand that the central banks are not really there to help us. They're really there to destroy your own wealth. And I think that's what you're really seeing.
Yeah, I really think blockchain at its core is about decentralizing your wealth and decentralizing where your money derives its value from. Which is why I believe in the long term that commodity-backed money will do quite well because of its value being inherent. Now, you've given us your sort of short-term price call for silver, but for the metal enthusiasts in our channel and our viewers, give us your short-term call for gold.
Yeah, I think gold's going to hit, probably 16.15 at least. And again, this is based on April futures. Okay. But again, we had that spike high, we had that one little fear one night. And I do think silver will find a bottom. I mean, certainly if I wasn't already short silver, I wouldn't be a seller here. And I am still buying physical. Again, remember when you buy, invest, or hold, what you can afford to hold on to and not have to sell under any circumstances, you can buy now. Okay. I mean, I still believe obviously long term, we're going to go a lot higher. But as a trader in the short term, I think we're going lower. But again, either one, you put money in those things that you can hold on to because you want to hold them for the duration, not trade them.
Sound advice. Any last thoughts for our viewers before we let you go?
I think just, again, I think watch price, trade the markets. And the biggest thing for anybody who's trading, okay, or more active, just know where you're getting out. And before you get in, know what your exit is going to be, because the biggest fault or flaw in most investors is when markets go, some go against them and some go for them. They seem to always want to liquidate the winners and hold the losers forever. And that typically creates a much bigger problem over their future.
Thank you so much for joining us, Bubba. Take care.
Thanks, Nick. Have a great day.
That's all we have for today's interview with Bubba Horwitz, Chief Trading Strategist at BubbaTrading.com. So glad that you guys could join us. And as always, if this is your first time, please go ahead and subscribe to our channel, as well as check out agxpay.com to learn how the power of modern silver money can help you claim financial freedom. Take care.